Something shifted inside the banking system this year, and most people have no idea it's already affecting their account. A rule that was quietly approved is now changing how your deposits get reviewed, how your automatic payments get processed, and how quickly your money moves. If you get a paycheck, pay bills automatically, or receive any kind of government benefit, this affects you directly. Stay through this entire video because by the end, you will know exactly what changed, what it means for your wallet, and the specific steps you need to take right now. If you want to stay ahead of changes like this one before they catch you off guard, hit subscribe right now. This channel exists to break down exactly the kind of financial shifts that quietly affect your everyday life. Subscribing is how you protect yourself before something goes wrong, not after you are already dealing with the consequences. People who stay informed make better decisions. Be one of those people. Now here is something important before we go any further. You did not do anything wrong. You are not in trouble. This video is not here to panic you. It is here to prepare you. Because the people who get hurt by banking changes are almost always the ones who never heard about them until it was too late. The people who come out fine are the ones who understood what was coming and adjusted early. That is exactly what you are going to do today. Think of this as a guided walkthrough. One friend explaining clearly to another so that by the end you feel steady and ready, not overwhelmed. Let's start from the beginning and build this up layer by layer, because there is one small detail buried inside these changes that most people completely overlook, and that detail is the one that catches good, responsible account holders by surprise. We will get to it. But first, you need to understand what the rule actually changed and why it happened in the first place. For years, the electronic payment network that handles direct deposits, automatic bill payments, and bank transfers operated under a system that watched money flowing out of accounts. The focus was on what left your account. Was a payment going to a vendor you had authorized? Was the amount correct? Was the timing expected? These were the questions the system was designed to answer. What was not being watched as closely was the money coming in. Incoming deposits, payroll transfers, government payments, even refunds were processed with significantly less scrutiny than outgoing transactions. That gap became a problem as fraud became more sophisticated. Criminals figured out how to exploit the incoming side of the system. They learned how to route money through innocent people's accounts using compromised information, how to initiate fake deposits that appear legitimate and then get reversed days later, leaving the account holder in the negative. The entire model needed updating, and that update is now here. The new framework requires financial institutions to apply active monitoring to both sides of your account activity. That means when your paycheck arrives, when a tax refund posts, when a family member sends you money, all of it goes through a review layer that did not exist before. The goal is to catch fraud patterns before they complete, rather than after the damage is done. That is genuinely good news for you. But it also introduces a new reality that you need to be ready for. Here is that detail most people miss, and we teased it earlier. Because the new monitoring applies to incoming money, your own legitimate deposits can sometimes trigger a temporary review flag. Not because you did anything wrong, not because your employer made an error, but because the automated detection system saw something it did not recognize as your normal pattern. Say you get your paycheck every Friday from the same company. Then one week, your employer sends you a reimbursement check on a Tuesday for travel expenses. Same company, different day, different amount, and the system does not know it is routine. It holds the deposit while it checks. You are expecting that money to be there, and it is not, at least not yet. That is the kind of friction these changes can create, and most account holders have no idea it is even possible until it happens to them. Let's walk through a real example with actual numbers so this becomes completely clear. Imagine someone earns a standard bi-weekly paycheck of $2,000, deposited every other Friday. Everything is predictable, and the system learns that pattern quickly. Now in March of that same year, they receive a year-end performance bonus of $800 deposited on a Wednesday. The system sees an unexpected mid-cycle deposit from the same employer, but at an unusual time and an unusual amount. The fraud detection algorithm scores it as requiring verification. The bank places a 1 business day hold on the $800. Meanwhile, this person had set up their car insurance autopay to pull on Wednesday morning, expecting the deposit to be there. The autopay pulls, the full balance is not there yet, and the payment declines. Now they have a potential lapse in coverage and a returned payment fee. That is a real chain reaction triggered by a rule designed to protect them. Knowing this in advance changes everything. They could have called the bank, given notice of the expected bonus, and the hold might have been waived. That is the kind of awareness this video is building in you right now. Now let's talk about how your bank statements are changing, because this is the second major shift that affects you, and it is one that actually works entirely in your favor. Think about the last time you looked at your bank statement and saw a transaction description that looked like a scrambled code, a string of letters, numbers, and slashes that told you absolutely nothing about what you actually spent money on. That experience is being addressed directly. New standards are requiring that transaction labels be written in clear, descriptive terms. A payroll deposit now has to be labeled in a way that clearly identifies it as payroll. A purchase from an online retailer needs to be labeled as a purchase. A utility payment needs to be recognizable at a glance. This sounds small. It is not. When every line on your statement makes immediate sense, you catch unauthorized charges within seconds of reviewing your account. You do not need to spend 30 minutes cross-referencing a cryptic code against your memory of recent spending. You see something unfamiliar, you act on it immediately, and that speed is often the difference between recovering your money and losing it permanently. Have you found this helpful so far? If someone in your life needs to understand what is changing with their bank account this year, would you share this video with them right now? Let's move into something that matters enormously to people who have ever dealt with a fraudulent charge or an unauthorized automatic payment. The process for stopping those payments has changed in a way that gives you much more power. Under the old system, if you noticed a suspicious pending charge on your account, you could call your bank and report it. But the bank would often tell you that they could not take action until the transaction actually completed and the money left your account. You were forced to watch it sitting there in pending status, sometimes for several days, knowing something was wrong but unable to stop it. After it posted, you would file a dispute, wait through an investigation period, and eventually, hopefully, get your money returned. Meanwhile, your balance reflected the loss. The updated rules now allow your bank to take protective action the moment a suspicious pending transaction is flagged, even before it completes. If you report a transaction as unauthorized while it is still in pending status, your bank has the ability to block it before the money ever leaves. That is a fundamental shift in consumer protection. For anyone living on a budget where even a few $100s missing for a few days creates a domino effect of late fees, missed payments, and overdraft charges, this change is significant. The key is that you have to act fast. You cannot wait a week and then report it. The moment you see something that does not belong in your account, report it immediately. Same day, same hour if possible. Now here is another piece of this that deserves its own moment because it affects millions of people who have been told their situation is simply unrecoverable. Social manipulation scams, sometimes called social engineering fraud, have devastated families across the country. These are situations where someone calls you pretending to be from a government agency, your bank, or a technical support team. They create a story, usually involving urgency and fear. They tell you your account is about to be closed, or that you owe money and will face arrest, or that your computer has been compromised. Then they walk you through authorizing a payment yourself, which is the trap. Because you technically approved it, banks historically had limited legal tools to help you recover the funds. The rule change creates a more formal category for payments made because a person was deliberately deceived. Banks now have clearer responsibilities to investigate these cases and greater tools to attempt to reverse transactions made under false pretenses. This does not mean every victim automatically gets their money back. That is the myth. Here is the truth. Recovery depends on how quickly the fraud is reported, how far the money has moved through the system, and whether the receiving institution cooperates. But it does mean your bank has to take it seriously, document it properly, and make a real effort rather than simply telling you there is nothing they can do because you authorized it yourself. That shift in institutional responsibility matters enormously. One thing worth saying clearly right now: if anyone ever calls you and asks you to read them a code sent to your phone, you hang up. If anyone tells you to send money to protect yourself from fraud, you hang up. If you receive a call claiming to be from your bank and something feels wrong, you hang up, find the official number on the back of your card or on a statement you received in the mail, and you call that number yourself. Caller ID can be faked. The only safe move is to initiate the contact yourself using a number you verified independently. Let's talk about a mistake pattern we see play out repeatedly, because this part could save you from a situation that is entirely preventable. The first mistake people make is treating their bank account like something that runs on autopilot. They set up direct deposit and automatic bill payments, and then they never check in. They assume everything is fine because nothing has gone wrong yet. Under the new monitoring rules, occasional holds or flags can happen on legitimate transactions, and you will not know about them unless you are regularly looking at your account. Checking your account at least twice a week takes about 2 minutes, and it puts you in control. The second mistake is not updating your bank when your income pattern changes. If you get a new job, a pay raise, a freelance deposit, or any kind of irregular income coming in, your bank's fraud detection system does not know that is expected. A quick call or secure message to your bank noting that an unusual deposit is coming can prevent a hold before it happens. The third mistake is sharing banking credentials with budgeting apps through a method called screen scraping, where you give an app your actual bank login and they log in on your behalf to collect your data. This creates a serious security exposure. Look specifically for apps that connect through secure, token-based authorization, meaning you authorize the connection through your bank's own interface without handing over your password. The fourth mistake is staying with a bank that is not serving you well simply because switching feels complicated. That is changing. New rules require larger financial institutions to make it easier for you to transfer your financial data and move your direct deposit and automatic payment setups to a new institution. Shopping around is no longer the logistical nightmare it used to be. If your bank charges fees that drain your balance, if their customer service is unhelpful, or if their technology is outdated, you now have more realistic options for making a switch. The fifth mistake is ignoring overdraft fee structures. Some people have no idea what their bank charges them per overdraft transaction. Some institutions charge fees that can stack multiple times in a single day. If your balance runs low, those fees can erase what little you had left. Check your bank's specific overdraft policy today. Ask them directly. Find out whether you are currently enrolled in overdraft coverage and whether opting out makes more sense for your situation. For some people, having a transaction declined is far better than being charged repeatedly for each one that goes through on an empty balance. Now let's pause here for a moment. Think about whether any of those 5 mistakes sound familiar. Most people are guilty of at least 2 of them. If you caught yourself nodding, that means this information is landing exactly where it needs to. Keep going. If you're someone who receives Social Security, veterans benefits, or any recurring federal payment, this section is especially for you. The shift away from paper checks is accelerating. The federal government has been moving toward fully electronic benefit delivery, and that transition is happening at a faster pace now than at any point before. If you are still receiving a paper check in the mail for your benefits, you need to take action before the transition is made for you under conditions you did not choose. The process involves either setting up a direct deposit account or enrolling in a government-issued prepaid card program that loads your benefit onto the card each payment cycle. Contact the agency that manages your benefit directly using only the official contact information from correspondence you have already received, and ask them to walk you through the switch. Do not trust anyone who reaches out to you offering to help with this transition. Scammers specifically target benefit recipients during periods of system change because confusion creates opportunity for them. If you are someone managing money on behalf of a family member, an elderly parent, or a relative who is not comfortable with digital banking, now is the time to have that conversation with them and help them get properly set up. Do not wait until their check stops arriving and they are facing a gap in income. That is the worst possible time to be figuring out enrollment processes. If you are someone who runs a small business or side income alongside your regular employment, you need to be aware that your bank account may see more unusual activity than a standard single income account. Variable deposits, multiple payment sources, different amounts each time. These patterns can trigger more frequent fraud flags than a predictable payroll account. Consider opening a dedicated account for your business income if you do not already have one. Keeping those transaction streams separate protects both your personal and business finances and makes account monitoring significantly cleaner and more manageable. Is there someone in your life who handles their banking the same way they did 10 years ago and has no idea these changes are happening? Would you be willing to share this with them so they can get ahead of it? Now here's what you do today, right after this video, to put everything you have learned into action. Check your account right now and look at every pending and posted transaction from the past 10 days. Make sure you recognize every single one. If anything looks unfamiliar, call your bank immediately using the number on the back of your card. Next, log into your account settings or call your bank and confirm that your contact information, your phone number, and email are completely current. Banks need to reach you quickly when they flag something unusual, and if your contact information is outdated, they cannot. After that, look up your bank's specific overdraft policy. Find out exactly what fee they charge, whether you are currently enrolled, and what opting out would mean for your account. Then, if your income has changed at all in the past few months, send your bank a secure message or make a quick call, noting that you may receive deposits that differ from your typical pattern. This one step can prevent holds on legitimate money before they happen. Finally, if you receive government benefits by paper check, contact the relevant agency and begin the process of switching to direct deposit. Do not put this off. Let's bring everything together clearly. The banking system changed how it monitors your account, watching both what comes in and what goes out with greater scrutiny than before. That protects you from fraud, but it also means your own legitimate deposits can occasionally get flagged if they fall outside your normal pattern. Transaction descriptions on your statements are now required to be readable and clear, which makes spotting fraud faster and easier for you. You now have stronger rights to stop unauthorized transactions while they are still pending before the money leaves. If you were manipulated into sending money under false pretenses, banks have more responsibility to investigate and attempt recovery. Electronic benefit delivery is accelerating and paper checks are being phased out. You have more freedom to switch banks or use financial apps than ever before, and that process is becoming less complicated by design. Here is the final thought, and it is an important one. The people who struggle most with banking changes are not the ones with the least money. They are the ones with the least information. You just spent this time learning what most people will not know until they are already dealing with the consequences. That is not a small thing. That is real protection. The rule changed, and that is outside your control. But what you do with the knowledge of how it changed is entirely yours. You are not behind. You are ahead. And staying ahead, one informed decision at a time, is exactly how you protect what you have built. What is the one thing from this video that you are going to act on first? And why does it matter most to your situation right now?